Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin and Ethereum are finally showing signs of completing a 3-month upward correction. Liquidity pools remain below, with a 90% probability that the price will find them. Structural breakdowns, sell signals, and bearish patterns are forming for both major cryptocurrencies. Therefore, we remain poised for declines in both Ethereum and Bitcoin, even if they are not swift. Meanwhile, Swissblock reported that the Bitcoin risk index has reached 33 points, indicating a high-risk zone. The company noted an increase in institutional sales of digital gold and a sharp influx of Bitcoin onto cryptocurrency exchanges. All this suggests that traders and investors largely do not believe in further growth of the first cryptocurrency and are trying to offload if whenever possible. It's important to remember that the 78-80K range zone was previously demand as a key because it encompasses the average buying levels for Bitcoin among most traders over the past year. Since traders did not anticipate significant growth, many found themselves in losses and drawdowns when Bitcoin fell below the marked area. As a result, after recovering to this area, traders began to close losing positions at break-even, increasing Bitcoin's supply and driving prices down, triggering a new wave of selling. Swissblock also noted that the inflow of spot capital into Bitcoin ETFs is no longer capable of offsetting the overall pressure from sellers. In other words, demand is currently lower than supply, especially spot demand, which becomes the basis for big trends. The conclusion is Bitcoin is not ready for a new bullish rally. On the daily timeframe, Bitcoin continues to form a downward trend and is correcting against it. The trend structure is identified as downward, and the CHOCH line remains at the level of 97,900 USD. Only above this level can it be considered that the downward trend has ended. As there are no signs of an upward trend reversal, we believe a decline will resume sooner or later. On the daily timeframe, the nearest point of interest area for sell traders is in the range of 79,500 and 81,100 USD. This area has been worked out several times, but the market's response has been weak. However, on the hourly timeframe, the upward structure has been broken, so the probability of Bitcoin's decline increases. Currently, there has been no reaction to the bullish FVG, or the response has been very weak. On the 4-hour chart, Bitcoin is correcting against its own correction. The CHOCH line of the current upward structure is at 74,950 USD A consolidation below this level will signal a trend breakdown. This could be a very important signal for the market regarding a trend change. The completion of the upward trend on the 4-hour timeframe could serve as a starting point for a new burst of trend on the daily timeframe. There are still no fundamental grounds for Bitcoin's long-term strengthening, and spot demand remains very weak. Every day, more signals are emerging about the completion of a 3-month correction. The only bearish FEG on the 4-hour timeframe may provide an opportunity to open short positions. Ethereum is trading around 2072. Below the 21 SMA, it's a sideline on a graphic within the downtrend channel that has been formed since May 12. On the 4-hour chart, we can see that Ethereum has attempted to break above 2130 on several occasions, but has been unsuccessful. Given that Ethereum is consolidating below the 21 SMA, it could be at risk of further declines in the coming days, potentially reaching the psychological level of 2000 USD. Even if bearish pressure prevails, Ethereum is expected to reach the lower bound of the downtrend channel around 1955. A consolidation above 2100 and a decisive break above the downtrend channel around 2130 could be considered a clear buy signal, with targets around 2201. We ultimately expect Ethereum to reach the strong 2-8 mirror level around 2250. The Eichel indicator has reached overbought levels and is showing a negative signal. Should a pullback toward 2125 occur in the coming hours, this could be considered a signal to open short positions in the coming days, with targets toward 08 mirror level around 2000 USD. We even expect Ethereum to drop to the 1950 zone. That's all for today. See you online soon and good luck.